Hey everyone, welcome back to Corporate Decoder. Today we are looking at Houlihan Lokey's 10K annual report, and I'm telling you, trying to decode some of this stuff felt like trying to understand a magic trick. Are they making money or just making it disappear? We will find out. This report gives us a look into the financial health of a major investment bank. We will dive deep into their revenue, expenses, and future plans. If you want to follow along, I've included a link to this document in the description. Also, if you want to chime in with your financial expertise, be sure to join our community on Discord. First, some ground rules in this report when they say the company Houlihan Lokey Inc., HSL, our firm, we use, and our, they are talking about Houlihan Lokey Inc. and all of its smaller pieces. Also, when they talk about years, it's the calendar year unless otherwise stated. Now, for some warnings, this report contains what the SEC calls forward-looking statements. Basically, don't take anything in this report as 100% certain. Any statements about future stuff is just their best guess, and those guesses could be very wrong. They believe these risk factors include their ability to keep their managing directors and other important people, changing market conditions, any damage to their reputation, competition, and even global events. Houlihan Lokey Inc. is a global independent investment bank. They are experts in mergers and acquisitions, dealing with money and big projects, fixing debt problems, and giving financial advice. Think of them as financial advisors to all kinds of companies, from small businesses to giant corporations and even government groups. They have a corporate finance team that helps businesses with buying, selling, and merging with other companies. This also includes helping companies find the money they need to grow. There's also a financial restructuring group which steps in when companies are facing money problems. These experts help companies reorganize their finances, manage debt, and sometimes even avoid bankruptcy. The Financial and Valuation Advisory team focuses on giving advice about how much a company or its assets are worth. These valuations are needed for all sorts of things like mergers, taxes, and even legal battles. They are up against firms like Jefferies Financial Group, Lazard, Inc., Lincoln International LLC, Moelis and Company, and even the big boys on Wall Street. To win, they focus on their knowledge of industries, how well they handle deals, who they know, their good name, and how much they charge. Because they are dealing with money and investments, they are watched closely by the government. In the US, the Securities and Exchange Commission, or SEC, is the main police officer. In Europe, their advisory business is managed mainly through subsidiaries, which are being watched by regulatory authorities such as the United Kingdom's Financial Conduct Authority and Germany's Bundesaufsicht. Now let's talk about their organizational structure. A big thing to note is the HL voting trust. Basically, a group of people from inside the company control a huge chunk of the voting power, around 75%. This means they have a big say in how the company is run. Because of this voting trust, Houlihan Lokey is what the stock exchange calls a controlled company. This means they don't have to follow all the rules that other public companies do, especially when it comes to having independent people on the board of directors. Time for risk factors, the things that could mess up Houlihan Lokey's future. It's worth paying attention because if these risks become real, the company's stock price could drop. Market conditions can make or break their year. Things like recessions, rising interest rates, and even global conflicts can cause fewer companies to do deals, which means less business for Houlihan Lokey. Much of their income depends on commissions from successful deals. If a deal falls apart, they don't get paid, even if they did a ton of work. This makes their earnings bounce around a lot from quarter to quarter. They often grow by buying other companies, and it doesn't always work out. Sometimes they can't manage the new business well, or the people from the company they bought leave. A lot of what they own on paper is goodwill, meaning the value of the good name and customer relationships they've built. If something damages their reputation, the value of that goodwill could drop, which would hurt their finances. They operate all over the world, which means they have to deal with different laws, changing money values, and political problems. This can make doing business overseas tricky. Their top people are key to their success. If they lose these key people or fail to hire talented individuals, it could really hurt their business. The financial advice business is super competitive. They are up against bigger companies with more resources, which makes it tough to win deals and keep prices up. They could get sued by clients or shareholders who are unhappy with their advice. Even if they win the lawsuit, it can cost a lot of money and hurt their reputation. Here's another thing to consider for regular investors. The HL voting trust controls almost all of the voting power in the company. This means regular shareholders have very little say in how things are run. The report mentions a figure of $843 billion as the approximate value of the voting and non-voting common equity held by non-affiliates as of September of last year. Let's dive into the financials. Revenue was up, but remember those warnings because the good times might not last. Their revenues were about $239 billion, up 25% from last year. The corporate finance area really took off. The corporate finance revenues jumped 38% thanks to more deals closing. Like most companies, they spent the most on their employees. It was $120.52 billion, up 26%. They had more cash coming in than going out. They ended the year with almost $1 billion in cash. They also talked about credit risk. This is about the risk that people and businesses owe them money but aren't paying. Now let's pause and look at the auditor's view. KPMG, their auditor, gave a thumbs up to their financial statements. There was one thing that KPMG called a critical audit matter, and that's how Houlihan Lokey decides when a deal is really done for revenue purposes. They also said that Houlihan Lokey has solid control over their financial reporting. So what do we do with this information? Houlihan Lokey is riding high right now, especially in their corporate finance division, but there are big risks that depend on things like the market. Plus, a small group of insiders still calls a lot of the shots. If you are looking to buy the stock, don't spend all your money in one place. And that's our breakdown. Now it's your turn. Share your thoughts and opinions in the comment section below. Also, if you have found this video helpful, be sure to hit that like button and subscribe for more, and check us out on Discord. See you in the next one.